everyone. Today I'm with Sebastien Gaudin. I hope I pronounced well in English. Sebastien Gaudin in French. And you have been in the space of entrepreneurship since 2014. You started the CareVoice in March 2014, which is initially an app doing crowdsourcing of opinions, reviews on hospitals, doctors in China. And you have recently pivoted on a SaaS model, providing insurances, a service to interact, offer services, and engage with their users. So I'm very happy to finally interview you. It has been months. I wanted to have you on the show because I feel your experience would be so interesting and so inspiring for the audience, both in China as an entrepreneur, in healthcare, which is in insurtech, which is a very hot sector today worldwide and especially in China. So thank you very much for being here.
Yeah, thanks, Matthieu, for inviting. Pleasure to share my experience. Of course, it's always like time's constraints, but I wanted to do it. I think it's always important to give back to the community, to industries, and share more about what we do. So no, I think your introduction about the company is pretty on spot. We started CareVoice to address the mistrust from consumer for medical services. Quite strong mistrust here. People moving from one hospital to another, not compliant to doctors' prescription or recommendation. And many industries in China have been changed through the eyes of consumers. And so the idea was to start first an app open to the public to let people share their experience and get in return ratings and recommendations on medical providers, doctors to be more confident about their choice. But this pure 2C model is kind of challenge if you want to be able to scale. You need lots of funding. It delays revenues. The revenues are more linked to your user base and likely more advertising related, while we wanted to stay independent from medical providers and hospital not having any revenues from them. So I think we made a pivot roughly less than 2 years ago. And where we are now and growing well, the company, mainly around 2 dimensions. The first dimension has been to focus on the privatization of healthcare. There has been really a solid trend for privatization of healthcare in China, and we started to offer that. Our focus on affluent Chinese consumer and private clinical services. And the other side of it was what you mentioned, working with insurers through a software as a service, where we started to help insurance company to change and move out from their payer role to more health partner role with their insurance members. Yeah.
Sorry, I didn't get fully the first part. You said 2 dimensions, so privatization of healthcare. So this is a part which is still the same rating, or?
Yeah, I think the focus on this privatization of healthcare or related to the privatization of healthcare has been on the premium market, meaning our platform at first was open to the public. We were working with, we had some segment of customers we were going after, but it was not necessarily going for a higher tier of the market. Most people in China go to public hospital. This is the mainstream. So even in terms of cooperation with hospitals, we were working with both public and private, and especially because public has been really the mainstream. But then we started to realize that first, the general consumer are not as educated as in other markets. So if you want to have valuable feedbacks that could be actionable for improvement and so on, it's better to target on more educated people. And then if you look at public hospital themselves, even though some of them want to do better the job, they have so many constraints, right? The first constraint is budget and is a number of patients that visit their centers. So before they are really able to make a change in the way they manage their hospital, it takes time. While if you start to look at the private sector, which was really starting to boom, there are lots of needs of building the confidence from consumers, really adopting more patient centricity, more transparency in the way they do the care. So it's why we said we started to focus more on the Chinese affluent consumer, more educated, and private sector, so private clinics, private hospitals, or VIP services of public, which started to be a bit like private sector. So this was the first part of the move, and of course, the private health insurance component is also closely linked to this, right? Because usually you have a private health insurance to cover the cost of care if you go for private.
I see. So if I understand, your clients have been both hospitals, clinics, and insurance companies now.
So actually, hospital and clinics are not our clients. We have been very, very clear from quite early in the process. We didn't want to have any revenue streams from hospital and clinics. We don't want to have any incentive to send people to hospital. We don't want to have any incentive to select one hospital versus another. Okay. What we do with hospital and clinics is we give them free tools, especially a patient feedback monitoring tool, so that they can collect the feedback from their patients when they come for care. And from there, that they can better do what they do. They can get analytics about their different medical teams, compare with other hospitals, improve their quality of care. And of course, it serves their reputation and the fact that it can help people to be more confident to select those hospitals, especially people from insurance companies that are using our services. So this is more how we work with hospital and clinics. It's open to any hospital and clinics who are embracing transparency and patient centricity. We give them those free tools.
How do you get your revenues then?
So the revenues come from the insurance side. So
it's only insurance side.
Yeah, from the pivot we did to with the SaaS model, we offer these mobile services to insurance companies that are using our mobile solution to create health services for their members, right? So at first it was to help their insurance member to find medical services according to your own insurance. So let's say you are insured by AXA, you receive your policy pack, you can in one step activate your mobile health service, and there all the information about your own insurance plan are there. If you start to look at medical options around you, let's say for a dermatologist or whatever specialty, you can check out which ones are going to be with direct billing, which one you're going to have fully covered, which one you have still out of pocket. So this is how we started the first version of the software as a service, personalizing the experience for you, according to your insurance plan. And from there, in the past 18 months, we've been growing our value proposition and making our SaaS more and more valuable to end user and our insurance clients and partners.
I see. When you were saying two dimensions of momentum of growth, privatization of healthcare and the SaaS model to serve healthcare, but it doesn't mean two streams of revenues. So the only one stream of revenue is for insurance. Okay, I got it.
Exactly.
I got it. Could you tell us more about the size of the company now in terms of if you can disclose revenues, the size of the team, number of users, number of clients, number of partners? I got some metrics on your website, but if you could share with your audience, could be interesting.
Okay, so we are this year we are heading to roughly hit $2 million USD annualized recurring revenue, which is a typical metrics for SaaS company. With 500,000 users, close to 10 insurance clients, and over 100 employers as part of the beneficiaries for their employees of our solution.
Okay. So ARR indeed. So you invoice your clients on an annual basis, not monthly basis.
So we have even longer term contract, right? We have contracts that could be 3 years contract, and then the way to invoice is usually more on quarterly basis.
Okay, I see. And in terms of, I saw you raise money. I saw different numbers. I saw 2 million, 3 million, depending on if I read on TechCrunch or on other articles, which are not the same date actually. So what is it now? How much have you raised? So
in total, we raised a bit more than 3 million USD. We did, like most startups, like family and friends love money at first. Then we did an angel round, which was our first significant round, and involving mostly entrepreneurs, China-based or European-based entrepreneurs. This was in July 2015. So roughly, 18 months after starting the company, and it was still before the pivot. And then we joined China Accelerator, a good accelerator program in late second half of 2016. That trigger some preliminary additional financing or investment, but that came as part of a round that we closed last year. So end of 2017, we closed our first VC background with also local Chinese healthcare investors. So totally we raised a bit more than $3 million USD as of now.
Interesting. There's one thing I really would like to talk about with you is, as I mentioned before, we prepared the interview a little bit. We little bit prepared, very, very little. I sent you some of the questions I wanted to ask you. And one of them is, how do you align the interest of so many people who have been around you? I've been very impressed by seeing how many successful entrepreneurs, actually VCs, people in the community of healthcare, in the community of entrepreneurs in China have been either in your capital, either supporting you. I guess you have thought a lot about this. I guess you have worked a lot about this on how to align all those interests.
I think it's just a matter of a few things. One is French entrepreneur in healthcare, internet in China. There are not so many, right? So I think it's always creating some curiosity from some people. Of course, some people may just think, it's a bit crazy. It will never make it. But I think it creates some curiosity and some openness to better understand, what we are doing and why. I think our purpose is positive, right? As soon as it's positive, and it's something that people can easily buy in, right? We are here to help people to have a better healthcare experience, which are much more consumer-centric. And any of us have been facing situations for ourselves or close where we feel that it's not simple at all, to experience healthcare. So I think that's quite a topic that is, some people are sensitive to. And then it's just because we have been lasting, right? It's been like, we started the company 4 years and a half now ago, and we've been through different steps or stage. I think now we found our path, and we started to really get great traction, great partners, great clients. That's just a matter of perseverance and being in a field that people are sensitive to, I guess.
Going back on how do you attract the eyes of successful entrepreneurs, for instance, in China? And I know you have been be able to attract the eyes of them. What do you offer them? Do you offer them some shares in your capital? Initially, do you offer them a board seat? How do you keep them involved with you along your path of growing? I feel you have this community around you supporting you.
Yeah.
How do you keep them? I think it's a big question a lot of people are asking themselves. How do you keep involved people around you when actually you are growing your business and you need the money to grow your business? You cannot basically give them money, not much, and you would like them to have on the board. You would like to have them involved. How do you manage that?
I think that's a good point. It's true that from day one, because I was moving from a large healthcare company to run a startup in the consumer space, in the technology space, I was underestimating the challenges, of course, to succeed, but I was quite clear about the fact that it was brand new for me. And I had to find people that can help. And I was not able to manage to get co-founders at start. Now I have. I think I've been joined by 2 great co-founders 2 years ago. But at start, it was not the case. So I wanted really to find people that could be that could have different perspective on what I'm going to build, right? People coming from, so I put together a group of advisors. So people I approached and say, I knew them from my network or whatever. And I say, okay, I'm going to do this. I want to have support and advice from you from time to time. And how you can get the buy-in. Again, they need to buy in the vision, the willingness to, but then of course to give them something. So it has been quite straightforward. I give roughly 0.1% of the initial capital to each advisor. And I had at start something like 8-10 advisors, and they had an option to invest at the same time with a special discount versus any other shareholder. And so this is how some of them have also invested. or they took a role first as a pure advisory. And, when we did our angel round, they came in because they've been observing the company for, 12 months, 18 months. And I took people from, leading healthcare communication agency, leading like McCann, leading tech company like Airbnb, people like who succeeded in e-commerce in China and later on sold their companies. And this actually, I've been redoing it reshuffle because your need of advisors evolve over time. So I would say every year, then we brought in new advisors, right? So some were remaining, some were lasting, because they were able to continue to help us and support us. And so then we started to really put in place like 1 year advisory contract where we grant options for shares that we vest after 1 year where they've been fulfilling their support. So of course it takes a bit of time also to meet from time to time, but actually then the way also to do it is, and this is something we learned through China Accelerator, is to have really, really good communication to your shareholders, advisors, and also the community of investors. So we try to have every 4 to 6 weeks a newsletter that goes to more the broad investor community, but that involves shareholders and advisors, to whom on some topics we may ask for help. And of course, we can also proactively seek specific help for some advisor on specific topic. But I think it's something that we've been reinforced. I did it from day one, and it's really part also of any accelerator program, the way they help you, and they help you to continue to nurture this kind of relationship with advisors. It was like this at China Accelerator, and more recently at Ping An Accelerator we did. And I think it's highly valuable. But of course, you need to give transparency and help people to understand what you do, right? Then otherwise, no way that they can feel part of it and come and help you when you.
It's very, very interesting. And how did you get those metrics like 0.1%, giving them a contract, able to invest later on at a discount? Were you advised on this? Were you reading? Were you on top of your head? And then you say, okay, we are going to give 0.1%. How does it come from? How do you structure that?
I think it's a combination, right? There are some typical standard level of share that you give to an advisor when they are at the board, right? And usually it's more, 0.5, 1%, 1.5%. But usually these guys, you really put them, and they come at one single guy, and they are really part of more or less of your company, right? And they have really strong engagement. Here is more soft. At least at SAAS was more soft engagement. And then you just need to have something which is a bit significant, but just more, it's significant and symbolic, right? So, the equivalent at first was something like 3,000 USD or 4,000 USD of free shares, right? Which when the first round we raised, 200,000 USD, it's like, if you look versus how much we raised, it starts to be a bit significant at this scale. Of course, now it worth 10 times more. But I think when now we are granting this equivalent of this 15 share, now it's like 10K USD or 15K USD equivalent, but it's really more on a contract base with some milestones and investing.
I see. You were talking about the co-founders, and you said you started alone. Then you founded co-founders 2 years ago. So basically, it was already 2 years and a half you had been starting. How do you find them? How do you build trust? And how do you make sure they are the right ones? And finally, how do you integrate them when you have already done so much during 2 years and a half alone? That's a question that a lot of entrepreneurs are asking themselves. How do you tackle this issue?
Yeah, I think it's very tricky, and of course I would have liked to bring in early on co-founders that can help me to grow the company faster. Especially then you need to be early on have complementary skills, right? And there is no way that you can hire sufficiently senior people, talented people to fit the gap that you have, right? And what you need at the early stage. The only way is to have co-founders. And yeah, I think I tried at the very beginning, but I was not at all in the network of entrepreneurship in China, in the tech scene. So at least you cut most of the guys who are relevant for that. And I was not really clear neither about what I would need at first until you are really hands-on in. So I made several, and then it has been really iterating. I tried a few later on, definitely when before preparing the more significant round with VC. I knew that it was something that you can't, or you really reduce your chance to raise significant capital if you don't have co-founders. So it was in 2016 where really I put myself this goal to bring in co-founders, and actually I had 2 attempts before getting this done. So the first one is a person that came and worked for me, worked together for 4 or 5 months. In the process of hiring, or she met also our board members or senior advisors. Very good fit potentially. And actually the experience of 4 or 5 months have been more for that person a kind of difficult challenge because we were still very early stage. So I think not enough used to a startup, never had a real startup experience, which of course when you see how tough is it and you have to build everything and still there are many things that are not built and you still need to run, right? So that was not the right fit. And then there is another guy, also potentially good fit with that time startup experience, but he was a bit more financial constrained. So the idea was he worked with me on the side, not on a position for kind of 6 months until we were supposed to raise the round. But actually raising the round took us like 12 months more. So it was too long for him to wait. And actually what happened is that, and this is the best way, I think what happened is that my 2 co-founders came in when we did the pivot to InsurTech, when we were in China Accelerator. So to some extent, it's kind of rebirth of your company also, right? Your company just like changed drastically the way you operate, the way you create value. And one of them actually have been a professional friend for 2 years before, was already a professional friend. He was starting to advise the company more as on the advisory side for at least 9-12 months before taking the role. And I think he jumped in as soon it was a good window. We did the right pivot, started to have a dimension, and from his professional life, it was also the right window. So that was perfect. And the second one was more recommendations to our investor.
Okay.
So one of our VC investor, did recommend us. It was also a very complementary profile versus what we were newly building, and someone who had experience in startups, someone who had experience in various industries. Ultimately, and to your question about how do you get them on board and so on, you need really to give, it should be, you should stop to be, the one deciding everything, right? It should first, you break really the responsibilities. Each of us should, and the way we did it was quite interesting, was to say, look at the stakeholders around us, who we need to engage, right? From, media, investors, shareholders, end user, prospect, and so on. And each of us were accountable for different stakeholders, meaning all the activities behind it, right? And different KPIs, of course, aligned with this. And this is how we started to frame very separated scope. And then just the principle of taking decision together when there were some problems, right? When there were some issues about the company, when there were some, and really be transparent. And because we were rebuilding the company on a new offer, then I think it worked.
It's very impressive. So basically, in about 2 years, you build a new business model as with insurance companies as clients, and you are now at the $2 million US ARR within 2 years, which is a very, very quick growth, basically, because you didn't leverage much of the past existing business model, right? It was totally new 2 years ago.
Yeah, but of course, it's the platform, for instance, our technology assets is the same, right? And we build on the initial platform to create this software as a service. So no, of course, it's not like building a new company from scratch. We've been able to leverage a lot the company technology, that are our network of hospital and clinics that is also very important in the SaaS model for insurance, and the credibility of the company in the industry, which is very important in B2B side, right? And,
talking about the product, so actually I downloaded the app. I played a bit with it. It's a very the tutorial are very intuitive. So you get how to use the app very quickly. You get the ratings very quickly on the hospital as well. You see comments on the hospitals on different providers. Could you tell us more about what currently the app is solving as problems for the insurance companies, for the users, and for also, I guess, the stakeholders you talked about, the brokers, everyone surrounding this industry?
So actually, I guess the app that you are referring to is the free version, right? It's the app that is available on App Store for anyone with first level of content and services. And this is mainly the similar app that we've started with. Of course, it has been upgraded over time because the rating, the recommendation, the search engine is the same that is used also for our SaaS for insurance and insurance members. But as soon as you use our solution as an insurance member, you have a different experience. Either it could be inside our app, or it could be inside the app or the WeChat of our insurance partner. We bring our mobile solution wherever our insurance companies, clients wants to engage with their insurance member, right? So it depends on their existing assets, digital assets, and it is. And so what do we actually now we cover really the 3 dimension of helping insurance member to stay healthy and encourage or reward healthy behavior, helping insurance member to easily find and access medical services, and third, make their usage of insurance benefits very transparent and very also easy and fast access, right? So, it starts with, for instance, now we have a step tracker with weekly targets that can be activated for some of our insurance clients that allows to indeed encourage more physical activities and have a direct impact on your premium. We have an AI virtual health assistant that is powered by Mayo Clinic, which is a leading US medical institutions, through which you can discuss with this and discuss like we are discussing now, or chat with this bot for 5-10 minutes with your symptom. And from there, it helps you to understand what is the likely underlying condition that you have and what should be the course of action. Can you manage on your own? So there is a significant self-care component on it. And in many situations, you can manage on your own. You don't need to see or visit a medical professional. And if you need, what is the kind of specialty you need to see, what level of emergency you need. So it's really to help you to manage your symptom and knows what you should do. And from there, we can guide you to online consultation. We partnered with some online consulting, online consultation service, or directly to offline, referring you to hospital or clinics. And then from there, if you need to, of course, submit your claim, get your reimbursement, this is done fully online, so it saves you time and money, right? You get back your money early on. You can order your medication online through a partnered pharmacy. You can upgrade potentially your insurance if you want to have more benefits. So this is mostly the kind of customer journey for end user as soon as you access to this upgraded version. And so you were asking, for the insurance, what the value for them, right? I think insurance companies are facing a number of issues, among which their plans are not that attractive if now they are not completed with some services. Right? If it's just an insurance plan, you know that if you have a problem, they're gonna pay for this. But you're even not sure because it's not that easy to understand those plans. But anyway, that's another topic. But it's really about helping those insurance products to be more attractive because they are more supportive of the health needs of the potential end user or employee or individuals. And does this mean that by doing this, they have more sales, right? They're more likely to sell. And we have already measured this kind of 50% additional sales if you bring the solution with your plan. The second thing is, as soon as you have you have this kind of service, you can measure satisfaction and the retention. And we have already up to 40% higher renewal rate when insurance members are on the solution and the service versus not. So that's also a very direct impact, of course, for insurance. And when you have this, you generate a lot of data. You generate data about your customer, about the medical network that help the insurance company to keep improving their product to make it more personalized. And then your member being on mobile, you can digitalize a number of administrative related tasks of the insurance. I mentioned, for instance, the e-claims, but it's same for some prioritization, some different papers that are done today offline that can be done digitalized. So then you reduce the cost of very human-intensive activities like call center or claim management, and it drives, of course, costs down for them.
I see. There are a lot of different topics raised here, and one of them I'm a bit surprised that all those insurance companies, AXA, King and others you are working with, they should be supposed to already have those kind of softwares of apps. We expect them to have at least the money, the investment abilities, the thinking of that. Did you replace something existent, or did you create something new?
It's like so some of them have some beginning of app, right? To be and especially most of the apps are more claim related, which is more the administrative element of it, right? You have an insurance, at least you want to be able to submit your claim online. But I think it's a kind of wrong start, because you start not really helping people with their health. So the usage of this and the competing aspect of it is not that high. And the problem is that those the assumption you did that they have the capabilities and so on, that's not true, right? They are not a digital company, they are a technology company. People have in mind that creating an app is simple, but now with the evolution of technologies and what's happening, it goes too fast. There is no way to catch up with the technology, and quickly an app become obsolete, is not attractive enough. And so if you want to really bring something highly valuable, you're leveraging latest technologies that is going to be continue to work for your customers, software as a service, is becoming the standard across industries. It's like for Salesforce, right? If you imagine you build your own CRM, look, does it make sense, right? No, it doesn't make sense to build your own Salesforce. It's the same, right? If you want to create engagement around health insurance for your customers, don't try to build something. Look around, and now you have companies like us with a software as a service that ensure you're going to have a very personalized experience for your insurance member that reflect your brand, that reflect the service that you want, that reflect your insurance plan, and that is highly cost effective. When you build an app, it costs you X. You don't know what is going to be the usage. You need to reinvest regularly and so on. While when you are software as a service, it's pay per use, so it's very efficient move.
I see. Talking about development, you said that it's a full-time job to develop apps, develop softwares. Currently, you're on iOS. You have developed a mini program on WeChat. Could you tell us a little bit more about your ecosystem in terms of development, specifically actually tailored for China, but also generally speaking about your development platform?
I think the core is the backend, right? It's and soon we'll reveal the way we are seeing now the product, but we are heading towards kind of OS system, a kind of CareVoice operating system. So we have a kind of own backend architecture where we can very easily and automatically customize the digital experience for any insurer, any partner we have for their end user. And this takes us a few minutes, and we can also give and grant the access to our partners to do it themselves. So I think that's a very solid element. The other element is that we have some technologies that are really advanced technologies that we either build ourselves or we partner with third parties. Like, for instance, this AI virtual health assistant. Actually, we made a partnership with a US tech company, Sensory, who is very solid in this space, and we help them to localize here for this part of the world, and also to embed this into our full customer journey for an insurance members. Because with the outcome of this virtual health assistant, you still have ideally the need to combine this with healthcare navigation, right, or recommendation to online consultation. So I think these are, two components, right? The structure, the back end, and some technologies, and then from the front end, then it's typical for any software, right? So we are available on iOS, on Android, on inside WeChat, and we can bring this mobile solution in the environment of insurers. So then we are also for now either on Ali Cloud or Ping An Cloud, especially since we joined Ping An Accelerator. And so we have the ability also to bring our SaaS in a different cloud requirement, or even on premise, possibly, or on private cloud for some insurers.
I see. Talking about the AI you brought from the US, AI is very linked to voice. So your part of your job has been to adapt it to China in terms of voice, in terms of content, in terms of language. And how are you leveraging this AI from the US, saying it's a Western AI, so it's the standards are different, as very often how Western players are positioning themselves in China?
Not much about not really about the Chinese are very good in AI, especially natural language processing and Chinese recognition. So actually there are different components in this technology partnership, and some components actually come from Chinese company behind also, behind the US one. But actually where we are leveraging this is more with Mayo Clinic, which is a US top leading medical providers, and all the medical content, the clinical algorithm behind the investigation and the outcome of this conversation with the virtual health assistants comes from Mayo Clinic, which is of course very good for the branding and the confidence of Chinese consumer.
How do you deal with regulation in China? Healthcare is a very regulated sector everywhere in the world. In China, I guess it is as well, even maybe more. You are bringing AI from the US. How do you deal with all those questions?
I think the main regulations are on. There's one which is more like business licenses. How can you operate and so on. And for now, CareVoice, we operate without any ICP VIE model, because we don't sell services online, and the sales are closed. It's more like a B2B business. But at one point, it may be something that we will start to look for. VIE
being, just to people who don't know, VIE is being viable interest equity, meaning that you partner with a Chinese equity, which is invoicing for the clients, because the foreign company cannot invoice. For instance, in travel, it's very, very often VIE. So there is a purely Chinese equity invoicing the client, and internet it is as well VIE system. And some companies are listed on the NASDAQ with a VIE structure in China.
This is one kind of regulation, but for now we are not exposed to. Another kind is more about user privacy data, which is also a very important topic. Actually, people tend to think that China regulation on that is behind or not necessarily aligned with other countries. If you really go through the Chinese regulation, guidance or the latest issuance, they're also very strict. I'm not sure they are enforced the same way, at least for now. I'm sure that it will come. But on our side, actually, we comply with both US, very, very important US for healthcare is HIPAA, and more recently with Europe GDPR, because we have partner insurer or employer service provider that are requiring this. So we definitely are now compliant and de facto to the Chinese regulation. So I think user data privacy security is highly important. You can't sign a big insurance company if you don't comply to this regulation. So then the one you were referring to is more for medical license. Or here we don't actually, and especially for the AI is not a medical diagnosis, remains a self-assessment tool for the patients, right? For helping the patients to make their own decision, but it can't replace medical diagnosis by a licensed doctor. So you need to be very straight about the disclaimer on that. Of course, the content is high quality, it's coming from medical providers, it's supporting, but ultimately it's not replacing a medical diagnosis.
I see. Okay. As I mentioned before, actually before when we prepared the interview, I feel you are very present in the media. You are being in Amsterdam. I see some press release in Amsterdam, in Shanghai, in Hong Kong the FinTech forum. You are very, very active in all those forums on the scene. What does it bring you? Because that's taking a lot of time. What does it help to actually find your co-founders, find investors, find partners? What did you take from it, and how do you make use of it?
Yeah, no, I think it's a very good question. It's always tricky decision to say whether I should do this, and you need to have your own, strategic goals and see, what fits in and what not, right? So, I think quite early on, I've been very open to and actively seeking exposure opportunities or for this kind of events. But they have evolved a lot over time, right? I think at the very beginning, it helps you to start to be a bit more, recognized as something as startups like emerging. So for instance, I remember we were Seed Star number 2 in Shanghai, which was a big competition and so on. And it was good to to reach this. It was, I think, at the time of our angel round, maybe something like this. So it was more like the exercise of pitching and potentially, meeting some angels around. But it was, I guess, more a way to show that our startups started to be recognized and having something, get the first, few, 1 or 2 rounds. And then came the pivot to InsurTech, and that was very critical to be recognized by insurance industry leaders, InsurTech conferences as one of the emerging InsurTech company. So from, let's say, September mid last year, and mostly for 6 months period, we took many opportunities to do this. And it was a time also we were closing the round, so it was good to show investors that we were recognized by top insurance industry leaders conferences and InsurTech. We've been at the Digital Insurer, Singapore, Asia, where we were first runner-up, Pacific Insurance Conference in Hong Kong, where we were 6 InsurTech, speaking to the top leaders of insurance industry. A few examples like that. And actually, that was the first objective. But the second objective was, of course, BD at that point of time, right? Because all these guys in the rooms are insurance leaders. And we had 6-9 months of launching our solutions to insurance with first insurance clients. So we were in the phase of of course, building our pipeline. And that has been very effective for that, right? Directly meeting CEO, C-level executive in those conferences, people in charge of innovations, who are people who are potentially the first sponsor or the first guys that are going to bring you inside their companies. So this is really pure BD and seeking sales, right? So first was really to get the recognition that we became an InsurTech among the emerging InsurTech, and to generating leads for insurance. And part of a third component is more pre-marketing for new markets, new geographies. So when we went to Southeast Asia or Hong Kong or Singapore, Singapore mostly, and as you mentioned in May to in Europe to a big InsurTech conference where we were invited to speak. It's also part of kind of pre-marketing to start to see whether or not beyond China mainland, how it is perceived. And that was also the pre-step before deciding to launch in Hong Kong. We officially launched in September in Hong Kong, but we did generate leads across Southeast Asia region. We had interest in Malaysia, in Singapore, in Indonesia from a number of insurance companies. And we assessed all that in February and said, okay, let's go for Hong Kong for different reasons. It's the best choice to start with outside mainland. And in May, we did the same this year for Europe, and we start also to see a lot of interest there. Now we are doing a strategic round with strategic investors, meaning we bring insurance-related investors to the capital of the company. And of course, this is also part of the way you connect with the right people and prepare potentially an expansion beyond Greater China.
You were talking about going overseas, from China to other countries. You're talking about Europe. You're talking about mainly Southeast Asia. What do you feel are the differences in terms of operation, in terms of ecosystem in healthcare? And I talked recently on the show with Thomas Meyer from Mobile Now, who was telling me that China is very advanced in terms of use of technology with QR code, WeChat, creating the ecosystem. As we are living in China, we live it every day. But it's very new for the people. Like someone in the CRM system from France was asking me, we have to follow a client in China, and I'm thinking on the POS, point of sales, how many people use cash? I told him, that's fine. 99% have WeChat or Alipay with payment, and they will use QR code. So you don't have to be worried about it. What do you feel are the differences in tech, in the health tech industry between China and the rest of the world?
I think, what you mentioned is obvious, right? China is very, very advanced now, and interestingly, in insurance, they are eyeing a lot what's happening here. A company like Ping An became the number one insurance in terms of business size worldwide, and more importantly, in terms of innovation, where they've been investing in the technology space. Ping An Tech, their arm, have already been incubating several companies that have been IPO, Lufax, Ping An Good Doctor, and the insurance overseas are just like looking at that and saying, okay, they are building real strong ecosystem service to consumers that are a way to, get the next generation of, or to capture the new insurance, or create new insurance products. So definitely we see, and I mentioned Ping An, but Zhonggan is also another very strong example, pure full stack digital insurer. So we see China as being our, home and more importantly, our R&D hub, right? It's here we've been building CareVoice, we've been building our SAAS. We are going to continue to innovate. And interestingly, these are innovations that are going to go now across markets. Hong Kong was a good move to go because it's a very mature market, generally speaking, but especially for health insurance. Everybody has a private health insurance. It's normal. The market is very privatized. So the fact that we've been localizing our platform there, matching the requirements, also more demanding. I mentioned about security compliance, more demanding market on this aspect. But at the same time, it's also a market where they're still a bit desktop oriented, especially employees. People are not yet using as much as mobile that is. So there are some adjustments that we do also, but it's picking up definitely. I was discussing with people in North Europe. They are already cashless. They're already mobile. So it depends on the countries in Europe, but you have already this. Right? And then if you look Southeast Asia is following what's happening in China. Right? So very quickly, all these smaller countries, Southeast Asian countries that are already very mobile first, I think are going to be very solid adoption of what we do.
Interesting. Thank you very much. Thank you very much for being with us, Sebastien. I hope you enjoyed it.
Yeah,
and
those are great questions.
Thanks. Hope everyone enjoyed to listen to us, and thanks for listening.
Yep. Cheers.